Good morning. Good morning. So, one of the questions that we get quite a bit when we get towards the end of the year and prospects are looking for tax preparation services. And so they're reaching out to us to just say, hey, we want to work with you guys going forward. We see the reviews. You guys are awesome. And we want to work with you, which is great, right? We have great tax advisory services when it comes to tax preparation, tax planning, all of that. It's amazing. But one of the things that we find is we're requesting items for tax preparation is that the accounting side is very, very weak for the clients that we're going to be working with going forward. And so here's some things that I want to make sure that you're looking at when it comes to your financials, and because these are the things that we look for. So you want to make sure that your balance sheet accounts are reconciled on a regular basis. So that means your checking and your savings accounts, right? And then also your lines of credit, right? You don't even think about that. Yeah, let's get those reconciled. Let's get the credit cards reconciled. Let's also get the loans reconciled on a regular basis. Those things need to happen to make sure that all of the principal and interest amounts are being allocated properly. And then also make sure your assets are added to your financial statements on a regular basis. So if you just purchased a vehicle, you just purchased a building, property, whatever it is, that needs to be showing up on your balance sheet. One of the other areas of weakness is whenever an owner takes out funds from the company or they put funds into the company, they do not properly affect the capital accounts. That needs to happen. Is it an owner's draw? Is it an owner's contribution? Is it a partner's draw, right? Are you a partnership? You have multiple partners, right? Those things need to be happening on a regular basis. And I'm not even going to get into the outside basis and making sure you're tracking that properly. I'm talking about just the financial statements right now. And then you have your profit and loss statement. So we're seeing a lot of line items that should not be there. There should not be an uncategorized income line. There should not be an uncategorized expense line. You should not have a miscellaneous line or ask my accountant line, right? Those things absolutely should not be there. But then there are other things that may not be as obvious to someone that's doing their financials, like meals and entertainment. That sounds innocent, right? Well, entertainment is no longer deductible, so you do not want that showing up on your financials, because, of course, your tax preparer, if they're well versed, they'll understand that that should not be there. But if they're not, they may place that on your tax return, and that could absolutely be a flag for audit. So while tax preparation is critical and it's important, now tax planning is even more, but that's another story. Really making sure that your financials are solid is another critical piece to it, and that's something that we do very well. So whether that means just cleaning up the last few months or going all the way back to the beginning of the year and making sure that your accounts are reconciled and on a regular basis and everything is kind of showing up properly, that is something that we can work with you on, whether it's cleanup, setup, review, whatever that is. Make sure your financials are looked at. Whether you are a startup or a business owner who has been in practice for several years, it does not matter. I've seen it all across the board. You want to make sure that those financials are cleaned up before you go towards tax preparation. Okay, I hope that helps you. You guys have a great week. We'll talk to you next time.